Hey, this is Cedric West, and thank you for allowing me this opportunity to share some important items with you. I specialize in tax strategies and tax planning for individuals, for self-employed individuals and business owners. So today I want to talk about some of the top issues for small businesses, such as the Section 199A deduction, the corporate tax of 21%, the meals and entertainment, the cash method of accounting for small businesses, not net operating losses, and like kind changes. So those are some of the top issues that small businesses are struggling with when it comes to taxes. So, the laws and regulations could influence how you manage your business or tax planning. So here's a summary of important developments that you should be aware of. The Section 199A allows taxpayers other than corporations, such as partnerships and S corps, what they call a deduction of 20% of qualified business income earned in your trade or business. Now, not all business are qualified for this particular deduction. So, this deduction could be very beneficial, if you fall within the qualified trade or business, and then also if you have the correct entity structure as well, you could benefit greatly from this qualified business deduction, which um, can reduce that by 20%. So that's something to be aware of. Also, the corporate tax rate has decreased as well to a flat rate of 21%. So now it's effective for years starting. It started last year, back in 2018. So now the corporate tax rate is 21%. There's another hot topic called the entertainment expenses. In the past, you were able to deduct 50% of meals and entertainment expenses. So now the entertainment portion of your expenses are no longer deductible. Now you can still deduct the 50% cost of meals. If you are present at an event and there's food or beverages, and long as that they're not considered lavish or extravagant, then you can deduct those meals. And so that's something that can be, it's discretion on your part. If you go into, for example, um, you know, a personal invite from top CEO, and then there's tons and thousands of dollars worth of food, a lavish event or a very exquisite event, then what they're saying is that you can't take a deduction on that. Long as that if you add an event where there is food, you can take that deduction at those particular events. Um, and also, you may have to make a few changes in your accounting system as well, because typically, what we have seen is small businesses they clump the meals and entertainments together, expenses together. So that's something that you have to actually separate now. Separate entertainment expenses from your meals expenses so that you can take those deductions now. Interest expense, that deductibility may have been limited to 30% of taxable income. So the interest expenses have been limited to 30% of taxable income now. So now more small businesses can use the cash method of accounting. So what that means is that to qualify as a small business, uh, you know, taxpayer, pretty much to qualify as a small business, during the 3 year, what they call the 3 year testing period, average annual gross receipts does not exceed 25 million bucks. So, and the reason why I said that more businesses qualify because previously through the for the 3 year test period, it was only limited to 5 million. So if you were a business and if you were generating $10 million previously, you wasn't considered as a small business. Now they pushed it to 25 million and considered that small business. And so now you can you can utilize the cash method of accounting for tax purposes. A few more items here. The carryback of net operating loss is repealed. And so what happened is that now you can carry forward net operating losses. So for example, if you have a net operating losses, previously you could carry back 2 and carry forward 20. With the tax changes, they eliminate the carry back ability, but you can carry forward that net operating loss indefinitely. So you're not limited to 20 years. you can continue to carry forward that net operating loss going forward. So in addition, so net operating losses generated after 2017 cannot reduce tax liability by more than 80%. So that's something to consider as well. And then one last top issue for small businesses is that like-kind exchanges are now limited to exchanges of real property started in 2018. So no more personal property is included under that like-kind exchange. It's only limited to real property. So thank you for allowing me this opportunity to go over some of the tax issues for small businesses. So if you have any questions or concerns, or if you're struggling with taxes when it comes in that regard for your business, give us a call. We'll be more than happy to sit down with you, go over some tax strategies that you can implement to start saving today going forward. So I'm looking forward to working with you, and you have a great day. Thank you.